Samir Arora joining us this morning. Samir, good to have you with us. I was just looking at your latest tweet on the paint industry, and I couldn't help but laugh and wonder maybe we should just start off from there. We've been wondering the same thing, Samir. You're in terms of what it is about the industry that's causing everyone to enter it, but clearly it seems to be the flavor of the moment. There must be some opportunity there.
Anyway, good. I'm in office today, so I'm very happy for that. Just talking to you from a different environment. Anyway, so I was just saying that even the Gobar industry guys want to enter the paint industry. That was the underlying message. But the real reason, of course, is the paint industry has done well because of 3 or 4 good companies which have done well, and so it's obviously a place where new entrants want to enter, and Grasim looks like a serious contender because they have money and they have some distribution and they have some related businesses. So it could over time be good for them and therefore a little less attractive for others. But this will take 3-4 years. And in India, we talk only day to day.
This is true. It is great to see you in your office. I can see quite a detailed background, and I'm sure it's a wonderful feeling to be out in a new location as well. It's the flavor of the new year as well, Samir. Sitting atop 50,000, optimism, earnings are looking good, and I know you continue to be positive on the overall trajectory, of course, but we really do seem to have started the year on quite a positive note.
My thing is that I am bullish, but I don't like the kind of bullishness that is presented these days by everybody, as if everything is perfect. This is the best time for any market, Indian market, there's a 5-year bull run, emerging markets are coming in. You can be bullish and be a little bit calm in your life instead of getting hyper, because that is where the disappointments come. And if you look seriously, then, we got fooled last year in the sense that in the beginning of the COVID cases, when they happened and India didn't get, suddenly in Singapore, there were WhatsApp messages as to why Indians are, protected from that because we have haldi and we have this food and we have mirchi and whatever. And we got fooled once for the first 1 or 2 months. If you see today, it is very, very serious. It is not over. You look at Hong Kong. UK has just said that they will have lockdown till May. In Singapore, the health minister said that travel will not come back this full year, and all industries to get back to normal will take 2 years or 3 years. And this is a country which has near 0 cases. Look at Germany, look at Hong Kong. So for us, be bullish is okay, but it is not an ego trip for each guy to say I am more bullish than the other and this is bigger than the other, because even if you feel like just now Prashant Jain said, which I just heard, which I also believe, that if the returns are 13-15%, it is as bullish as you can be. If you get more returns, you will not refuse them, you will not reject them, you will take them and say thank you. But you don't have to plan for that and get every morning hyper, which is what I think beyond a point becomes a bit irritating.
Samir, hi, morning. I can see that placard of NAV behind you. But anyway, that aside, Samir, historically, one hasn't seen, or rather one has seen the relevance of budget actually, reduce over the years, barring a few odd sectoral movers here and there. The market has taken budget as just a non-event and moved on along. Could it be any different in this pandemic year?
That is a bullish sign that this time the market run is only happening primarily because of FII flows or whatever, and maybe a bit of recovery trade, rather than that something will happen in the budget. So now the budget can only disappoint. In the sense that if they're disappointed, it will be more like a self-goal. But otherwise, there is some hope that even if they do nothing bad, it's, I think, quite positive in itself, looking at the last budget and the budget of 2020. But because the finance minister said that this is a 100-year budget or something, which I have not understood what it meant. Did it mean that the last time there was a pandemic was 100 years ago, and that is why it's a 100-year budget? Because even India in itself technically is not 100 years old as a new country. So I don't understand exactly what was meant, but if it was meant that this is going to be a great budget, I am thankful that the market doesn't seem to have discounted that in any way, because it's very difficult to get a budget which is like that. Because if you look at the big things, let us say the government says or the budget says that we'll spend a lot of money on infrastructure. Who cares? Because anyway they are spending and nobody knows exactly where are the projects to absorb big infra. If you say we are going to divest, who cares? Because the old divestments are going on, and whether they are happening or not itself would be big news rather than having much bigger announcements. So the only thing which from a public point of view can be called a big budget is if you cut taxes. Now, maybe they cut taxes for 80-90% of the public, but I don't think they're cutting any taxes for the high net worth guys and the 2 crore, 5 crore guys. And the stock market is dominated by these guys. So in the end, the market impact may be there only, I think, if personal taxes are cut substantially. Otherwise, you will do it for some sector or the other. If you do some incentives for real estate, some higher interest that you can charge against your taxes and all that, okay, that is good. But that would not qualify for a 100-year budget, which is the confusing thing as to how that phrase has come up.
Samir, the one figure that the market does watch out for very keenly, and I can say the FI fraternity as well, has been the fiscal deficit number. Now, estimates are ranging anywhere between about 6.5% to 7%. Although, having said that, because of disinvestment, the fiscal math is really all over the place. What do you think is going to be a digestible and acceptable figure for markets?
This year, the emphasis on that, or the focus on that would be much less, because whatever way you look at it, India has spent less than what other countries have done in terms of percentage of GDP. So I would think that even 7.5 would be okay if it. First of all, the bridging of that in the next few years. First of all, it cannot happen in 1 year. But next year, anyway, there'll be a much higher number in terms of tax collections because of the rebound and recovery in the economy, and maybe the GDP growth will be 10 to 12% or something, people say. But even if it is 7.5, I don't think anybody cares. In fact, the negative would be that the government takes it too seriously and says that, oh, this is not what we plan for, and therefore in the next 2 years or some such short period, we want to come back to the normal path. So I would think right now it's not a big issue, because I don't think it's going much beyond that.
Samir, to the point that you were earlier making, if indeed there is a heightened tax, and it's a big if here on the super rich, that's surely not going to go down well for the markets, you think?
Not at all. Right now, no. Because right now you want confidence of the investor. Investor doesn't mean FII investor. Investor also means all these guys in India who are, doing well and investing and putting their savings and not moving to Dubai or Singapore or London, where now it's quite easy. Not maybe to Singapore, but Dubai is also very easy. And for the high net worth, London is much easier than Singapore. All you need is £2 million, which thousands of people in India would have. So you don't want to discourage people from moving base because they feel that at every opportunity their taxes are increased. Because otherwise everything is doing well. Right now, all we want to avoid are self-goals. Over time, I think worldwide taxes will have to go up, because so much money has been spent that someday this bill has to be paid. It's just that right now, let's not be the leaders in the world in doing that. Later on, over time, either by broadening or mostly by a little bit higher tax, something will have to be done over the next 1-2 years. But let's not start now and, in the middle of this, sort of just a start of a revival. Also, the one more issue is there, that what does Joe Biden do? Because his plan was originally that they will increase corporate taxes, that they will increase capital gains taxes. Now they have control of both Senate and Congress and also what do they do? What does he do? We don't know. But as per his original plan, taxes were going up. So let others lead. Then you can see later what to do.
What do you think, Samir, is going to be that prerequisite in order to, spur growth within the infrastructure sector, really boost that ease of doing business and that Make in India initiative that the government has really been following through with, particularly for infrastructure? Do you think that in the budget we will see a major thrust on this theme?
I switch off when these things are being discussed because they're so big picture and I'm such a small picture guy. But in a big picture sense, when we say that we are attracting money in infrastructure or as FDI in general, everything is good except that really we should not be celebrating when a foreign private equity comes and buys a ready-made building which has been rented out, which is earning 9% or yield or whatever, because that is like for the heck of it that we are selling out. These things should be bought by LIC and the insurance companies who are never getting 9% anywhere else. And it is just that we are becoming, the Indian system is becoming a tenant in its own system or in its own country. Because when the building is nearly ready and some landlord has to pay $50 million and $20 million he doesn't have, and then the whole building is bought by Blackstone and others, it's hardly improving anybody's infrastructure. Either they should be creating jobs or bring technology or something where it's truly, truly distressed. A 99% ready buildings being sold, what sense does it make? It's just forever you'll have to pay for the rest of the life for the next 50, 100 years. Pay a 9-10% income on that. Makes no sense. So I would think that, but anyway, nothing can be done. This is how open economies work. But I'm saying some of it is not really of any great help to the system. But in general, the problem with infrastructure investment, as far as I am concerned, because I am not setting up projects, is that when these announcements are made, the conversion to reality is 3-4 years away. And we don't know what to do with it, what will convert, what will not convert. So these are good backdrop kind of things. But you really, from an action point of view, next morning, what do you do? Even if the government says that we are spending so much on this metro, that metro, God knows when will it be done, whether the land is there, whether the project appraisal has happened. So that's why I don't react to these. I used to in the beginning. I used to even look at the railway budget, which I stopped 2 or 3 years before the budget itself was stopped, because we all learn over time.
Okay, fair enough. Infrastructure aside, given that, there's so much focus on healthcare, the vaccination and domestic economic revival, they pretty much seem to be interlinked. What is your outlook in terms of healthcare or the welfare allocations that we could see when it comes to revenue expenditure in the budget?
All I'm saying is big picture, you want allocation in 3 areas, including infrastructure. All I'm saying is I don't know how to react to it, so I don't relate to the numbers. But those 3 areas, all our life should be infrastructure, education, and healthcare. But what I mean is, I am talking from a stock market investor point of view. What will I understand if it is 10% higher or lower and where is it going? But it should be higher across these 3 areas, education, healthcare and infrastructure. Doesn't mean it's actionable from where I am looking at it on that day. I'm that day not looking at it in a very big picture sense that this is true. I'm saying what will I do with it on that day, and I don't know how to react to those, but those are the correct thrust areas. So they should be done. But from where you are interviewing me and from where I'm looking at it as a fund manager, these are all non-actionable. But they have to still do it. They can't be running on only what will please a stock market investor that evening. But these are the 3 areas where India must invest more.
Of course. Samir, we're waiting for that new stimulus to unfold and for markets to EMs, particularly India, to continue to see the impact of that. Paints aside, what are some of the other pockets that are looking interesting that perhaps you're just keeping on your radar?
No, paint, actually, I don't have any paint company. I was saying why those guys have invested, maybe for that reason. For me, it's the same old areas. I'm not changing every day. It's the same, generally consumer. But one formula we have learned over time in buying at any price is not a correct thing, because I even feel embarrassed as a fund manager to say, I may still feel, but how can I come on a public forum and say in investing valuations don't matter? I mean, I would be so embarrassed to even subconsciously think like that. So the thing is, the three areas we like are financials, consumer, and IT pharma, which now in the last few years has become IT pharma, specialty chemicals. And then once in a while, some other stocks where, some specific thing is happening. The question whether the budget will make me do any changes, as of now, that looks unlikely, because there is nothing, at least not planned right now in our mind or in whatever we have read, that there's something happening which could make or mar the prospects of a sector. Maybe on real estate they can do something more specific, and then we see whether it's really big or not. But otherwise it'll be more a general this thing. If suppose they say that we are cutting some taxes, then okay, some kind of consumer companies might benefit, but all those things will get discounted in a few hours. And then we move on. So broadly, these are the sectors that have worked over time, not just for me, because for me they have worked very well. But as I say to everybody, look at the Forbes billionaires list and divide all the billionaires into which sectors they come from, because that is the best representation of where long-term money has been made. And it's always from these three themes: retail, financial, consumer, IT, pharma types. It is never from cement and steel. And you look at it because of the dilution that is required along the way for those companies to get to big sizes. But of course, in various phases, something might be doing better for 2 years, 1 year, which sometimes we are able to get, but mostly we fail in that. So we have stopped trying for many years.
From the financials, I mean, we still had a smattering of numbers. Some are still due. Everything seems to be pretty much in line or above estimates. No major shocks as yet, Samir, because there were some expectations that, perhaps financials would continue to look vulnerable. But from what we're seeing so far, pretty much in line with expectations. What do you think?
Financials have played one more role, which even I didn't know, which is that when suddenly people started talking of unlocked trade, and we didn't really have these pure unlocked trades, suddenly we found that our financials did very well. And so we didn't miss these other unlocked trades in November, December, when this swing from one part of the market to the other was going on in full swing. So they have done their job already for me, because the good thing about the financial sector is that they can change their character as the market wants them. If consumer is doing well, the same financials will do well because they are exposed to the consumer and they lend to the consumer. And when there is some RBI, this thing, it helps the financial, basically because financials are underpenetrated in India in terms of loans to GDP, a mortgage to retail, whatever way you want to look at it, credit card density of how many cards they have. You look at all of them are underpenetrated. And then we have these still weaker PSUs and some NBFCs which come into trouble every now and then. So the rest of the stronger NBFCs and the private sector banks, 3-4 of them. Although please note that a few years ago, there might have been 7-8 private sector banks would have been contenders for a portfolio. Now they've been reduced to maybe 4 or 5. So in that sense, even there has been a lot of churn. So it's not straightforward. But yeah, these are like our paint guys who are doing well till 20 more guys come in, then we'll see.
Right. Samir, on the subject of concessions to beleaguered sectors, the other very big moving and dominant factor could also be the kind of uptick that you're seeing in commodity prices. I mean, sure, cement, paints and all these commodity plays have had a massive recovery in the stock prices from the March lows, and the growth numbers so far only justify those prices, and at least in few cases. But now the dominating factor is going to be how the raw material costs are going to weigh in on their profitability. So maybe whatever the budget does is going to be a little late in the day, don't you think?
Well, actually, the thing is that the corporate sector has enormously helped the government. Because if you look at all the beleaguered sectors, so let's say one beleaguered sector is the restaurant sector. Now, every day there are tweets that, oh my God, all my restaurants are full, everything is full. Then suddenly the airline guy says, oh my God, my traffic is up. Then the theater guy says, oh my God, my theater is about to get full anyway because 2 movies are coming. So there is nobody raising his hand to say I'm beleaguered because they are stuck between trying to please the market for the next 16 days or 2 weeks or 4 weeks and then genuinely telling the government what their problem is. So right now there is no problem in any sector in the economy, and therefore the government has a free hand to do what it wants. Because I have not seen, you please tell me which fellow came on your channel in the last 4 weeks to say that he still has a problem. The point is, this idea of trying to please the very, very short term is that nobody is willing to admit publicly there's a problem, and if there is no problem, there is no help required. But if you look at it from a big picture as an investor, it cannot be, which I said I think last time on your channel, it cannot be that the auto and the paint guy is celebrating that his margins are high, and the metal guy is saying and the oil guy is saying my prices are going up. It cannot be that the OTT guy is saying that I have so many subscribers and the other guy says no, public will come back. It cannot be that the home delivery guy says I'm about to go IPO at double the price, and the in store consumption or in location consumption guy is saying no, as soon as it opens everybody will come back. There will be winners and losers. Right now nobody is willing to say he's a loser, so therefore nobody needs to be helped because nobody is admitting that they need help.
Yeah, they were up until a certain point once the pandemic and the lockdowns kick-started, but not anymore. Okay, Samir, just getting back to budget then. 3 things for a millennial audience that Samir Arora is going to be looking out for, and for a market investor, 3 things that you need to look out for from the budget 2021.
You know, in the olden days, when I was in Singapore, I used to fly to India to see the budget. This was in 99, 2000 to up to some 5, 6.
Same.
I go to India every month, but I would go around budget day, sit with my team, no more. So the millennium guy, if he's really an investor, he need not look at the budget. There should be no decision he's making which should happen because in 1 minute he saw it, understood it, and bought it. There should be no such decision. That would be the correct budget. Because if you think that the budget is going to be so helping stroke hurting somebody, that means that the government in that sense has so much power to do these things. They should help the overall environment in terms of lower taxes, better infrastructure, blah, 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 but not necessarily choose winners and losers that day that I am. So there should be nothing that should come out of the budget. For a millennium investor, we'll all be seeing it and studying it, but it is more as an ongoing education about these things rather than to react that day. We have nearly every budget done something because we are a long, short fund, and nearly every time we have been wrong. On that day's trades over the next whatever, before we say, sorry, that was wrongly understood. There is no need to do anything.
Okay. Just stay put, and that's the word coming in from Samir Arora. Samir, always great to have you on the show. Thanks as always for taking the time out. But we do wish, maybe not this year, but next year you do fly down for the budget.
I want to fly for many other reasons, but it is now one of them. Thank you very much.
Yes.
Thanks a lot.
Thanks.